23 million people played tennis last year. How many people do you think played pickleball? A sport I hadn't even heard of 5 years ago. 36 million people played pickleball last year. And I attended the Central Park Major League Pickleball tournament 2 weeks ago, and I'm looking around, sold out, and I'm like, how did this possibly happen so quickly? And you looked around, and it was just a little bit of change, a little bit more dynamic, a little bit just adaptability around the sport, a little quicker, also solved a little bit of retirement problems, but it just made it so accessible. It was exactly what the market needed. 4 years ago, we did a transaction for InBev. It was a $6.4 billion transaction for an S&P 500 company. And it was a private investment grade transaction that Apollo led. At the time, no one thought of us really as a investment grade lender, let alone a very large retirement service business. And I received calls from every single market participant saying, nice job on InBev. Last time you're going to be doing an investment grade company financing, I suspect. And they kind of blamed COVID and they blamed other things. But the reality of that transaction, you saw all of the great things about Apollo. You saw the creativity, you saw the duration of our capital, the matching of our ability to actually meet with a corporate and actually design something that fit their needs. And you saw what was going on in the market backdrop with the capital. It was a great outcome, both our investors, but also for the client. And that led to $100 billion of private IG in the last 4 years. Obviously led with Intel, but it's our capital, it's our DNA, it's how we grew up in the business. It's something that I don't think you can create again. And it's what makes us so unique, and it's exactly what the market needed. Traditional credit managers, you can see the top of the page. Loans, high yield, IG, emerging. We've been doing this, the market's been doing this for decades. When we walk in every day, we come in with a very principal mindset, but obviously an asset management mindset. We want to take the single best risk reward every day. How do you do that? You do that by having lots of options. We call it origination, but you can see on the bottom of the page, I am fortunate enough to sit in a seat that we have teams that have been doing this on behalf of our own balance sheet for 15 years, sourcing balance sheet and understanding a framework for risk reward that fits our balance sheet and fits our asset management balance sheet, that enables us to make the best decisions every day and allows us to take the most appropriate risk. If you don't have all those options, you really can't do it. And in the future, where we're going, all the things that Mark and Jim are talking about, you have to be able to make the best decision on behalf of your own balance sheet, but also on behalf of clients' balance sheets, because that's going to result in the best risk-adjusted returns over time. And I think we've built all the capabilities to do that and actually executed that in the way that we've built our business. So we manage $562 billion. Everyone knows we are the largest alternative manager in the credit business today. What's unique about us is over half our capital is our own balance sheet. We're $365 billion in corporate, just under $200 billion in asset-backed, and we have all the products are on the bottom of the page, you'll see here, but we're broadly diversified. What's unique about us is that many of the businesses we don't start till we've invested hundreds of billions of dollars on our own balance sheet. We don't just launch products. In asset-backed, we launched a product 10, 15 years after investing on our own balance sheet, hundreds of billions of dollars with tons of data. We work it all out on our own balance sheet. We understand what works and doesn't work. And with that, I think that's the most exciting part of our story. And I'll go through that in a bit more detail, but very diversified across all the different asset categories. I'd focus on the right side of the page here. One thing that is unlike anyone else, and what I think exactly what the market needs is, we lead in debt origination, $151 billion in the light blue, but we also are a top 5 market participant in the secondary market with $134 billion of transactions. Every one of our competitors either is a leader in the light blue and nowhere in the orange, or a leader in the orange and nothing in the light blue. We're both. So we can go between markets at any time, and you really saw this during 2020. Private markets shut down. We were the largest market participant in secondary volumes, and we were able to earn great risk-adjusted returns during that time period, where if you only had a private mindset, and it's hard to describe, but it's a very DNA-focused mindset around risk-reward and primary and secondary, and not looking at things as private and public. It's looking at things just as credit, as just open architecture. And we touch every single sponsor. We have 4,000 originators. I joined here over 12 years ago, and we had less than 50. And we touch every one of these companies with 3,900 companies covered today. So when we go into a company, when we go into Intel, we're already one of their largest lenders. It's not like we go in without any understanding. We are talking to the company every quarter, whether or not we're doing a private IG transaction or we own that debt in some part of the capital structure. Again, I mentioned this earlier, but we have the widest funnel. We have the ability to make the single best decisions every single day. It's not about private and public. It's not about corporate or asset-backed. It's about what is earning relative to the risk, relative to the shape of the risk, what is going to earn the best risk-adjusted return. And it sounds kind of obvious. I know it sounds kind of obvious. Of course, let's take the best risk-adjusted return. But the entire industry, mostly partly because I'd say investors are set up this way, it's very narrow, very siloed. You have a private business, you have a public business. You have an asset-backed business, you have a corporate business. We have none of that. We just think people are going to come to us and say, here's a credit allocation. Team, do the best you can, very similar to what you do for your own balance sheet. And you've seen some very large sovereigns set themselves up this way. And I think you're going to continue to see a framework where people change the way they look at the markets. So Mark mentioned this a little bit, but we've done a fantastic job of servicing the green. Really, in our equity and high returning franchises, the industry has serviced the green in a way that has achieved great risk-adjusted returns for people. The dark blue has been, the fixed income business has effectively been a liquidity provider to the markets. It's been zero innovation. The people who work in credit have probably, if you ask who sits in the fixed income business, it's probably someone who you wouldn't think as the innovator of any firm. And what I love about our firm is that in our credit business, we've been trying to innovate for the last 15 years. In our origination business, we've tried to innovate in the last 15 years. And I think in fixed income, you're going to see some of the most, you've seen it with Intel and some of the high grade, but you'll see some of the most innovation in product design, in origination, in the way that you invest capital, the people that are investing that capital. It's going to be way more interesting of a business. It's going to require super high touch in terms of how you originate assets. It's just different than anything that you'll see, and it's a huge opportunity for us, given our balance sheet and given where I think all the innovation is going to come. So this is just a small subsegment of what we're doing. What's unique again about us is we own all of the investment grade on balance sheet today. So if we want to create a product that is 100% originated by Apollo, but also monthly liquidity, we can do that because we have demands for that product. So you see in our IG business versus the benchmark, you can buy our total return investment grade fund. It's effectively 100% originated assets by us. You have to go from daily to monthly liquidity, but you pick up close to 200 basis points of yield. And we think we're going to create replacement product after replacement product. It'll be investment grade, it'll be double B, you can see our single B products, but the investment grade part of the world where we already own several $100 billion of the risk, we're going to share in some of that risk in owning a vertical slice in a fund format, and we're going to provide monthly liquidity, and we're going to be, as Mark mentioned, provide more liquidity around some of these assets. This is going to be completely unique. It's going to take a little bit of time, but when people realize it, they'll realize that going from daily to monthly for 200 basis points of yield is an extreme outperformance over a 10 and 20-year period, and will be solving a lot of the retirement problems we have today in the system. If you showed me the page from 1994 to 2022, and this is the allocation of fixed income, I would have told you it would be a horrific career decision to be in fixed income from 1994 to 2022. We built our business as everybody was taking money out of fixed income. We've had a ton of tailwinds, and Mark talked about them at length. This was not exactly one of the tailwinds. This forced us to innovate in a way. It really bolstered our liability business. It really forced us to be super creative around how to generate returns. And for the last 2 years now, and I think on a go-forward basis, you're going to see a much more balanced approach. The last 15 years was the anomaly in terms of asset allocation. There are many of our investors literally do not have a credit allocation team because they got completely out of the business. They're just starting to build the business back up. And many of our projections do not anticipate any sort of tailwind in terms of just asset allocation, which I think will further the acceleration of our business. Again, the markets we touch are very large. The direct lending business, the sub-IG market, which we call UC, has really penetrated with private assets in the last decade. Since 2010, we've gone from effectively zero of the 3 trillion to 1 trillion penetrated. But again, IG is a $9 trillion market, barely penetrated, huge TAM for us over the next 10 years. And in terms of product design, again, direct lending, we've designed incredible products. The industry has done a great job servicing the sub-investment grade space. It's penetrated 1.7 trillion over the $3 trillion addressable market. But in asset-backed, no one's really done it. It's very small. We think it's one of the biggest drivers of our business over the next decade. We feel like we've invested the capital through our $8 billion in platform acquisition, our 4,000 originators, managing those assets on our balance sheet for 15 years already and having the same team in place. Again, I think this will be our market leading product. And you've already seen that with the design of our asset-backed business, and you'll soon see a wealth product. Since our investor day, you can see we've grown by 1.5 times in non-third party and 3 times in third party. In the future, I suspect these numbers to be significantly higher in terms of growth. The next 5 years, we could see north of 3 to 5 times in terms of our growth on the third party AUM over the next 5 years. And this is happening in other businesses. We didn't have a non-traded BDC. We traditionally did most of our direct lending in specialty finance company, which has been fantastically successful. But we launched a non-traded BDC 3 years ago. We targeted first lien, top of the capital structure, and senior. We've raised $12 billion in 3 years, and this will be one of the largest businesses at Apollo in the next 3 to 5 years. And 5 years ago, people told us that going over 2 times in 5 years from 248 to 562 was very ambitious. As Mark likes to say, we believed in the numbers and we achieved the numbers, but we think we'll go over 2 times in the next 5 years again. Both a combination of everything going on at Athene, a full acceleration of our third-party business. If I could tell you the amount of investors that still we've yet to penetrate globally, both in wealth, Asia, Europe. Europe could be one of the largest, fastest growing markets for us in the next 5 years, and you can see it here. Many people look at our growth and they'll always say, okay, it's driven by Athene, not third party. You're seeing we grew third party revenues in the last 5 years by 20%. The next 5 years, we anticipate third party revenues to grow by 25%. We are just starting in terms of penetrating many of the institutional and wealth markets, and we're pretty excited about new markets, particularly fixed income replacement. So the private and public markets, they're clearly converging. We've made a bet that we've set up our business to actually win when that happens. Many people in the industry have yet to get there. I think it's completely clear that that's where it's going. We think we're ready to win. And you don't have to really believe us. Just think about, it's pretty much like pickleball. It's kind of what the market needs.